USDA's June acreage and quarterly stocks report was bullish for row crops. Corn acreage was up 1.6 million from March, but below estimates at 92.7 million acres, with stocks down 18% from 2020. Soybean acreage was unchanged from March at 87.6 million, but below estimates. Stocks were 44% below 2020. And wheat acreage was above March in all but spring wheat, but stocks were the lowest in 6 years. And joining us with market analysis is Randy Martinson. And we did see corn and soybean acreage come in below expectations by quite a ways. That really puts a lot of pressure on yield now going forward, doesn't it, Randy? Especially because the increase in acres over last year in March kind of came in the drought areas, right?
Right. I mean, for corn, primarily the Corn Belt states backed off on acres. The Northern Plains, Western Corn Belt picked up on the acres. For soybeans, everybody increased acres a little bit, but primarily most of the acre increase came from the Northern Plains and the Western Belt again, which is where the biggest concerns are with weather. So yeah, right now we're going to be focusing a lot on what happens with weather and what the potential yield is for this crop.
So we have a lot of the Corn Belt in drought already, and if we just take what we know now and say we continue to see hot, dry conditions, how much do you anticipate yield will drop?
Well, we could be looking at a yield decrease pretty significant. It wouldn't be anything to see a 5% drop in the yield. I think that would be pretty reasonable at this point, seeing what the conditions are up in the Northern Plains and the Western Corn Belt. Same with soybeans. I think we could see the same kind of reduction. Now, a lot can change if we get some cooler weather and some rain. That certainly is going to help. But right now, the forecast for the first couple of weeks of July does not look conducive for good crop development.
So maybe ending stocks on corn below 1 billion bushels and maybe soybeans back down to pipeline supplies.
I would expect that we're going to see, at least at some point, we're going to see corn stocks below 1 billion, and it's likely we'll see the soybean stocks drop below 100 million.
So where do prices need to go back up to factor that in?
Right now I think we need to see the markets go back up to the old highs. I wouldn't be surprised to see us maybe even cross above those. I don't expect corn to cross over into the 7 area, but I think we could be in the upper 6s. As far as soybeans, again, I'm not looking for the big run to $17, $18 unless we see a major disaster take place.
So what about wheat? We did see an increase in winter wheat acres, spring wheat down from last year, but it's really more about harvested acres there, isn't it?
It is. Right now, it really doesn't matter what got planted. It's just how many are going to get harvested. I'm expecting, somewhere between a 30% to a 50% cut in our production.
So how high do you think spring wheat needs to go here?
Spring wheat needs to get up into the mid-9s to be able to ration the supply. I mean, the bigger problem is going to be you got a winter wheat crop that's not in very good condition or very good quality. It's going to need spring wheat to blend with it, but we're not going to have a lot to be able to do that. We need to get the price up to ration supply.
All right. Thanks so much for joining us, Randy Martinson with Martinson Ag. Thanks for watching Agweek on YouTube. Be sure to like and subscribe for more content. We post new videos every Saturday.